This is Alan Bush with ADMIS with the daily financial forecast for Thursday, October 1st. In the stock index futures, we did see higher prices in the overnight trade. This linked directly to news that Chinese economic data came in surprisingly better than expected. However, most of the gains given back now, this after some of the U.S. economic numbers in the morning hours coming in a bit on the weak side. However, technically this market looks like it is showing some signs of strength. Also, we are hearing more and more talk about the possibility of central banks around the world, especially the European Central Bank, possibly the Bank of England, potentially on a track to add more stimulus to their economies. So ultimately, I think this will be what rescues stock index futures, more accommodation from central banks. Now, moving over to the foreign currencies, we are seeing the dollar index coming under some pressure. This after jobless claims coming in up 10,000, and that was higher than the median estimate. Also, we are seeing the British pound trading higher with better than expected UK manufacturing numbers. Also, we are seeing the Canadian dollar and the Australian dollar better due to good gains in crude oil, and I think the crude oil probably is firming with these better than expected Chinese numbers. So as far as currencies, I think we can see some additional weakness in the dollar index today and also longer term as analysts, I think, start to believe that the Fed may be slow to raise interest rates. So I think interest rate differentials are starting to turn a bit more against the dollar index, especially if we are right in our thinking that the Fed will be forced to delay a rate increase. And now moving over to the interest rate markets, higher prices, especially at the long end of the curve. And we are seeing bonds with good gains in spite of mostly bearish news. This Chinese economic data should be considered to be bearish for the bonds, and yet the bonds are at least a full point higher. Also, we do feel that if we're right in our thinking that the Fed will be delaying a rate increase, that is supportive longer term for the interest rate futures markets. So look for further gains in Treasuries, especially for the 30-year bonds with what we are seeing today. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.